Hello everyone. So today we are going to learn about the purpose and use of special journals, and we are going to do only two journals today, which is cash receipts and cash payments journal. Okay. We are also going to learn about the nature of cash and credit transactions and the twofold effect of transactions on the accounting equation. Okay. These are the key skills that you will. These are the key skills that you require. But I'm not going to go through them just yet because I'm just going to go through the content quickly. Now, we've been learning about cash accounting for service businesses. Okay, so we've been learning about how do we source the documents. So you know what the source documents are. Now, when we're doing the accounting process, we collect the data, we record the data, and then we report the data. Okay, so now we've collected our data as source documents, and now we are going to actually record the data. Okay, so that's when we use the cash receipts and cash payments journals. Okay, now as I've said you earlier, it is for small businesses, people who are not very well equipped with accounting degree or something like that. They can still use this system to record their transactions. Okay, we've talked about different kinds of journals. So cash receipts journal, cash payments journal, sales journal, purchases journal, and journal. Okay, so today we are just concentrating on cash receipts and cash payments journal. Okay, now service businesses, they operate by providing their time, labor, or expertise, okay, or combination of all three in return for a fee or charge. Okay, most of these transactions are for cash. Okay, for example, hair salon, beauty parlor, okay, massage parlor, nails parlor. Okay, so these are some kinds of small service businesses that provide service for a fee. Okay, and most of these transactions are in cash, so they can record their transactions in cash receipts and cash payments journal. Okay, now again, service businesses, this is what cash includes. So we all know the cash includes coins, checks, and the balance of the firm's bank account. Okay, these are all classified as cash transactions. Okay, now cash transactions are recorded in a cash receipts journal or a cash payments journal, so that they are classified and summarized. Okay, now cash receipts will be when you're selling the goods, and cash payments will be when you're purchasing something for your business. Okay, now cash recording. Frequent transactions are recorded in their own classification column. So the cash journal consists of many different columns. I'm going to show you an example in maybe in another video of how to make a cash receipts and cash payments journal. Okay, so the transactions that occur frequently will have a separate column, and the transactions that only occur maybe once or twice a month, they can be classified under sundries column. So sundries column is again the transactions that occur very infrequently. Okay, now cash transactions are reported in the statements of receipts and payments. Okay, when I show you the example, I'm going to show you that as well. Now when we record the transactions every month, so cash receipts or cash payments journal, the total of the journal is taken for reporting purposes. Okay, sorry, I just want to touch base about GST as well, because we are going to pay and collect GST, and that is going to determine what is our liability to the government to pay the tax. Okay, now there is a way that we calculate that GST. So GST received on fees creates a GST liability. Okay, so this means that when we are selling this goods or services to a customer, we are actually collecting the GST. Okay, so when, for example, if we pay money to any business, we are paying the GST as well. So which means we are paying and the customer is collecting the GST. Okay, However, when the business purchases something from suppliers, okay, they are paying the GST. Okay, now when we have to pay the GST to the government, the amount of GST that we have collected, okay, we need to minus the amount that we have already paid to our suppliers. Okay, so that is going to be a GST liability. This one makes it more clear. So how much GST we have collected or charged, it means business, and every 90 days a business must report to the Australian Taxation Office, ATO. So GST has to be reported every 90 days, which is every 3 months, okay, which is also called quarterly. Now how much GST it has collected and how much GST it has paid. Okay, so collected and paid, so you need to subtract them to find out what is the GST liability. Okay, so if your collected GST is more than your paid GST, it is your liability. You need to pay the excess that you have collected from your customers. Okay, we are going to discuss GST in a little bit more detail down the track, maybe next session or something. Okay, now the GST, as selling prices are generally higher than cost prices, most firms will end up with GST liability. Okay, so mostly the firms will need to pay the GST to the Australian Taxation Office. Most likely that is going to be the case. Now cash receipts journal, okay, records cash inflows for the business. So cash receipts is cash inflow, when the cash is coming to your business. What are some of the transactions when the business can when the cash can actually flow to your business? Is cash sales, okay, collections from debtors. Okay, collections from debtors is also called the accounts receivable. Okay, capital contributions, loans, GST received. Okay, they are all going to be part of your cash receipts journal. Okay, now what comes, this is how the cash receipts journal looks like. So see, you've got columns here. So you've got a date column, you've got the details column here, you've got the receipt number. So every source document that you have will have the receipt number there. Okay, and this will tell you what the source document is about. Okay, so this is cash receipts journal. When you're receiving the cash is flowing in your business. Okay, okay, now this shows how much money has been deposited into the bank. This is the total amount of the source document. Okay, now based on the source document, you put the amount in these columns here. Okay, what we've got at the top is we've got debtors control. Okay, we've got cost of sales, we've got sales, and we've got sundries account. Again, sundries account is something that does not occur very often. Okay, so it will have a couple of transactions, the transactions that only occur once or twice or maybe thrice a month. Okay, now if I look at the cash sales, and you will notice that all the dates are in order. So this is how your cash receipts journal is made. Okay, all the dates need to be in order, what the source document is about, receipt number again, and the total money that has been deposited, that has been received from the customer. Okay, now the first one, cash sales, receipt number 651, total money deposited into bank was $66. Okay, where did my cursor go? Okay, now in this one, cost of sales was $30, sales is $60, and the GST collected is $6. Okay, so you can see that the sales is $60 and $66. Okay, now debtor $80, and $80 comes here. Okay, capital again $5,000, and it is under the sundries account. Okay, now this is a little bit different cash receipts journal because it has got the cost of sales as well. What is the cost and what did we sell it for? Okay, maybe let me go to the next question and see. Okay, all right, now again cash sales, for $66. This was the cost of sales, $60, and $6 is the GST. Okay, I'm going to show you an example in the next video, so stay tuned. Okay.